morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, July 21st. Hope everybody enjoyed their weekend. Nice here out on the East Coast. We had on Friday and yesterday. Well, yesterday we didn't really move too much, but on Friday we had Google that reported earnings. NASDAQ hit all-time highs. Again, hit all-time highs yesterday. But most of the move is on the opening. Remember, guys, so just want you to be aware when I show you the index, it looks a little bit more skewed because of the fact that you see the daily charts were just rising. Now, we're about 175, 180 points away from the 20-day moving average on the NASDAQ, okay? Does that mean that you buy here? Absolutely not, okay? Tonight's also going to be critical. We have Apple, Microsoft, Yahoo, VMware reporting tonight. Also, a few large cap tech. So that's also going to steer where the NASDAQ is going. Does it go higher? Does it go lower? I just feel at one point we're very overextended, and I don't look to buy stocks at new highs, especially that we're on the tail end of a bull market in the last 6 years. So I would be very, very cautious on looking to add to any NASDAQ stocks, at least right now, because we are really at extended areas here, and quite frankly, really unsustainable as far as the NASDAQ is concerned. We have a different picture in the transports. As you know, also the Russell, good gauge of risk, is now starting to falter as well. ES really not going anywhere. I'm going to show that to you. Most importantly, I have a couple indicators that I'm going to show you. I don't usually put too many on because we have a short time frame, but I feel the need to show you what is happening. Breadth of the market, good sign. The stocks above the 200-day moving average is starting to give a big warning sign. It has been making lower lows and lower highs since early April. Well, I should say July, let's say, of 2014. And now we're starting to break down here. And as you can see, we're starting to move much lower here. Not a good sign when you have stocks that are starting to break below the 200-day moving average. Most fund managers follow that rule. Above the 200, we accumulate on weakness. Below the 200, we start to lighten up our positions. And if this continues, you'll see a big move of selling coming into the marketplace. What happens usually spikes like this, as you can see here. Here's the S&P. Usually get a nice big run here, like we did back in 2012. Over here again, back in 2014, and we had a spike here, but nothing really too dramatic. So keep an eye on the breadth is starting to weaken, giving us a warning sign. Okay. Here's the advanced decline with volume that I like to show everybody. Trend of higher highs and higher lows have been broken. You could see this here. Not a good sign. Again, also breadth of the market giving us a warning sign to use caution here. Okay, now we have the sentiment, which is extremely bullish now, actually more bullish than I've seen in quite some time, picked up in the last couple of weeks. And when you're looking for a market top, as we all know, we need that euphoria of buying, that big capitulatory buy. And what I'm looking at, and let's get into the S&P, you can see here we've been rallying, and we gap up. All of these gaps eventually are going to need to get filled, and we've been rallying for the last 7 trading days. Okay, that again is pretty much unsustainable, especially at this time and where we are with the markets here going into the summer. We mentioned about seasonal strength in June 29th into like July 17th, which was Friday. That concluded. I am looking for some weakness going into the next couple of weeks, 2 or 3 weeks, maybe the first week of August, and then a slow grind back up to the highs, where I think a move lower will get everybody short again, and that's just going to add more fuel to the fire to push this market to all-time highs. S&P, the SPX, probably somewhere north of like 2190. Even 2200 is possible come September, October, but then I think that will be it, and I think the markets will roll over and go into a correction phase. But again, too soon to say. This is what I'm looking at, because we have all the cards in place for one more climactic push to the upside where we'll get everybody long. I could just see that in the sentiment is extremely bullish. We have VIX below 12. Very, very bullish for the VIX, bearish for the markets. It's inversely correlated. So these are all measures that we have to pay attention to, okay? Take a look at some of the other indexes. The IWNs, again, starting to roll over in this range for the last 7 months, but we need to be careful at 200. If that starts to really sell off and we break down, well, that means that one of our leaders, our secondary leaders, will follow the way lower. Okay, transports, lower lows and lower highs. Ugly, ugly chart. And I still can't fathom the fact that the markets are holding up this well. But again, nonetheless, we need to pay attention to this. This is also not a good sign. China, not a good sign. That although it had stabilized for 2 or 3 days, it has some major issues and major problems where you're just going to see that come up and arise in news again. Greece, same thing, just kicking the can down the road. Here's the diamonds. It's been basically back and forth here with a doji, not really doing too much of trading as well. Break above 182 will get us to at least touch the highs here, okay? And then lastly is the Qs, and here's what I'm saying. We're at 2 standard deviations away, probably closer to 3 now, outside of the band for a couple of days. This is something that even if all of the big techs that report tonight come out with some good news, I still think that the markets will pop higher and then look to take some profits here. The 20 is at 109.89, and this is from the Qs now. Unsustainable. You can't just go straight up in a line without having some major, even minor pullbacks. This is straight up for the last 7 days, so eventually this will come in. Do you short now? Well, if you know how to fade a rally or retracement, then that's up to you into your game plan. If you don't know how to do this and you're new, then I would just step aside, wait for the pullback if you want to look to get long. Hope it helps, guys. See you tomorrow. Have a great trading day today, and we'll see you then. Take care.